Welcome back to the channel. As always, if you copy trading, you're an absolute moron and you deserve to lose all your money. And with that out of the way, we're gonna talk today about a stock called Form Factor, ticker FORM. What do these guys do? Let's have a look at their profile. So essentially, they design, manufacture, and sell probe cards, which are devices for the testing of microchips that are required for GPUs and other processing parts. This has been something that has been in high demand over the last few years due to the emergence of AI, which of course is requires by hyperscalers and other companies these chips. So when you look at the value chain, these guys are really at the end of the manufacturing process for the hyperscalers to build their AI infrastructure. We have seen over the last few weeks and days how the Trump administration has conducted a series of announcements. We saw initially, prior to Trump second term, the investment by SoftBank of 100 billion, which was recently increased to 500 billion, and more recently, we have seen as well the announcement from the Saudi government. So all these items point at a very strong interest from the Trump administration to not only be pro-growth, but also to make sure that that they build an infrastructure with an edge over other nations. And of course, that signals that there is a lot more to come in terms of AI. So to power all that, I've been looking at some of the plans that are expected to take place. So Morgan Stanley expects that the hyperscaler capex is going to reach 300 billion in 2025. That is certainly above previous years. So we look at 50% increase year on year. That, of course, is very positive news for the AI infrastructure space in general. We can see as well in a more recent article by this website, fiercenetwork.com, that data center capex could top 1 trillion by 2027. And frankly, with the deal sizes that we have seen over the last few days and weeks, it seems that that is certainly achievable, right? So, like I mentioned before, the value chain, uh, these guys are really at the very end. And my view is that because of that, it may not be that obvious at this point in time how all these developments are reflecting on the stock price. But we can see on their website some pretty interesting KPIs. We can see that revenues are growing. We can see that the layers that they're producing are also increasing. And we also can see that the test intensity is going up. There's also an interesting factor that I'm considering on this particular stock as opposed to one of their competitors. This is a market with very high barrier to entry. And when you look at manufacturers of microchips, there is plenty that you can pick from out there. So you have, of course, SMTC. Everybody has been hearing about NVIDIA and AMD. But again, those are just microchip manufacturers, and there's a bunch of them. However, remember that this guy's business model is actually different. They provide testing equipment to all those chips, right? And what you have a lot of inventory that you need to bring to the market quickly. That can create very high demand for the equipment and services you provide. So I think we are in the early stages of seeing that happening over the next few months. And that's why I'm looking at this stock in particular. But also because of their geographical exposure. At the moment, their China sales exposure is about 10%. And management has been quite proactive in terms of managing this potential risk because there's still softness in the market in that geographical area. And they actually expect that potentially that could go to zero. Fine. But why does that really matter when you have a nascent industry right on your doorstep, right? Which is expected to take over as the absolute number one by a great deal compared to everybody else. There are also other um, intricacies with that. So their competitors are primarily based in Japan and Italy. So it really is a very small number of companies that provide these services globally. And of course, these guys are local, so the probability is that they're going to be the go-to provider for this part of the manufacturing process are probably higher, in my view, let alone any sort of intervention from the Trump administration, like tariffs or other measures that could put them at an advantage, could give an edge versus other companies out there. So with that, I do feel that this is a stock that's going to continue to do well. They had a bit of a uh, drawback here, right? But I do feel that this is starting to stabilize and is starting to turn around. Now, I'm not going to enter this stock right away, but it's certainly going to be in my watch list. And the reason for that is because, and it's really the reason why the stock dropped over the second half of 2024, is that margins declined due to concerns on HBM digestion period from their main customer. That's one of the main risks here, that they have really only two customers in HBM. And also softness in the mobile and laptop market. The decline wasn't due to competitive position deterioration, which is again one of the main points of my thesis, but rather margin and mix concerns. Now, this is being addressed by management through operational improvements. That already led to margin recovery in Q3 2024. So I do think that the turnaround is coming through. Maybe we just need to give it a little bit more time to see the consumer recover a little bit of the strength in some of the other markets. But for the timing, definitely keeping this on my watch list, likely entering over the next few weeks or months. Hope you enjoyed the video. See you soon.